My name is Farhan. This video will teach you how to calculate depreciation for multiple non-current assets and then prepare the extract for the statement of financial position. This is question number 12 taken from 2022 paper 2 past exam. Kevin Penn, a sole trader, provided the following information. So we are given the statement of financial position extracts as of 31 May 2021 for two different types of assets, which are the motor vehicles and the equipment. We know the total cost for these two types of assets. We also know the total depreciation, which is also known as the accumulated depreciation, and the relevant net book value, which can be calculated by subtracting the total depreciation from the original cost at any given point in time. We are given some extra information here. The first additional information refers to the disposal of a motor vehicle that was purchased on 1 June 2018. And the second information here relates to the purchase of an equipment costing £12,000. The third information here says that assets should be depreciated at 25% using the straight line method, and it is to be depreciated on a month by month basis. So on the right hand side of the screen, you will see that I've done all the walking. So let me walk you through each and every step. First of all, let's start with the cost of the new equipment that we have purchased as mentioned in additional information number 2. So we understand that we have purchased new equipment with a cost of £12,000. And if I was to calculate the depreciation on this new equipment using the annualized 25% rate that we're supposed to use for assets, we multiplied that on the original cost of £12,000 because we're using the straight line method, but we are also multiplying 5 over 12 as well. Now, why are we multiplying 5 over 12 as well? Because this new equipment was purchased on 1 January 2022, as it is clearly mentioned in the question in point number 2. Our main concern is to prepare the extract of the statement of financial position at 31 May 2022, which means this new equipment was only in use from 1 Jan 2022 until 31 May 2022, which are 5 months in total: January, February, March, April, and May. We understand that in a year we have 12 months in total, and because 25% is already an annualized rate, when we are multiplying it with the original cost, we also need to multiply 5 over 12, which reflects the fact that this asset was only in use for 5 months out of the total 12 months that we have in a given year. So once you incorporate all these calculations, you get £1,250 as the depreciation on new equipment. Next, we have to calculate the depreciation on the old equipment. Now, the total cost for the old equipment is already given to us at the very beginning for the statement of financial position extract at 31 May 2021, which clearly says equipment at cost is £36,400. We understand, based on the additional information, that we have no disposals during the year relevant to equipment, which means we can confidently say that this old equipment has been in use for the entire 12 months ending 31 May 2022. And if you want to calculate the depreciation in this case, you just simply apply 25% on £36,400 because we're using the straight line method. So on that basis, the depreciation on the old equipment is £9,100. Now that we have calculated the depreciation on the new equipment and the depreciation of the old equipment, let's find the total cost for both old and new equipment together. So the total equipment cost is going to be £36,400 for the old equipment and £12,000 for the new equipment, which makes it £48,400 as the total equipment cost that we need to include in the books at 31 May 2022. What about the total depreciation? We start with £20,700, which was the depreciation at end of previous financial year, which is given in this extract that we are given in the question. And then we are adding 1,250, which reflects the depreciation on new equipment, and 9,100, which reflects the depreciation for the old equipment for this financial year. and therefore we get the total depreciation to include in the balance sheet or the statement of financial position of £31,050. So this is what we have done here. So if you check the extract, which I have already prepared on the left hand side, so you can see equipment, which is mentioned as a non-current asset, has a total cost of £48,400, which is something that we have derived based on the total for old and new equipment. And then the accumulated depreciation or the total depreciation that we had just calculated to be 31,050, which we have included here. If you want to find the net book value, just simply subtract the total depreciation from the cost that we have, and which you get in this case is £17,350. So let's move to motor vehicles now. So we do understand, based on additional information number one, that one of the motor vehicles was sold, which refers to disposal. So the motor vehicle that was disposed had an original cost of £26,400, as it's mentioned here, and this motor vehicle was purchased on 1 June 2018. Okay, so if this motor vehicle was purchased on 1 June 2018, then the first year of usage for this motor vehicle would start on 1 June 2018 and end on 31 May 2019. Based on what we already understand, that a financial year for Kevin's business starts on 1 June of a given year and ends on 31 May of the following year. So the first year of usage for this motor vehicle that we have disposed should be from 1 June 2018 all the way until 31 May 2019. And if I was to find the depreciation in the first year, given that we are using the straight line method and the rate is 25%, so we just simply apply 25% on £26,400, which is the cost of the asset, and that gives us the depreciation of £6,600. Now, we also understand that the second year of usage for this motor vehicle would be from 1 June 2019 all the way until 31 May 2020. And the third year of usage will be from 1 June 2020 all the way until 31 May 2021. So this asset was sold on 1 June 2021, as it is mentioned in the question. So which means this asset was actually in use for 3 years exactly in total, starting on 1 June 2018 and ending on 31 May 2021. Based on our calculations that we have done in the first year for depreciation, we understand that depreciation per year is £6,600 for this motor vehicle. And if the asset was in use for 3 years, then the total depreciation can be calculated by simply taking the annual depreciation of £6,600 and multiplying it with 3, which would give £19,800. Now, what you have to do next is to find the remaining motor vehicles that we have at cost after this motor vehicle has been disposed. Now, to begin with, the statement of financial position that we're given at the very beginning of the question includes motor vehicles at cost of £95,000. Right. From there, we are subtracting the cost for the motor vehicle that we have sold on 1 June 2021 at the beginning of the financial year that we're doing all this math for. And that leaves us motor vehicle at cost of £68,600. Which means we can only calculate the depreciation on what's left for motor vehicles. So that's why if you want to find the depreciation on the remainder of the motor vehicles in the books, you apply 25% simply on the remaining cost of £68,600 and you get £17,150 as the depreciation for the remaining motor vehicles in the books at 31 May 2022. So if I want to do the calculation for accumulated depreciation or total depreciation, that should remain at 31 May 2022. Let's understand a few things. First of all, we are starting with the accumulated depreciation that's given in the statement of financial position at the beginning of the question for the previous financial year, which is 35,350. which should obviously be the opening accumulated depreciation at 1 June 2021 in the current financial year, which ends on 31 May 2022. Therefore, so if we start with this balance, we are going to subtract 19,800. Why? Because the motor vehicle that we have sold or the motor vehicle that we have disposed had a total depreciation of 19,800 pounds, which refers to total depreciation calculated over 3 years of usage, starting 1 June 2018 and ending on 31 May 2021. Then we are adding 17,150, which refers to the depreciation expense calculation for the remaining motor vehicles in the books. And that was 17,150 added to this, and therefore the final balance we end up with is 32,700 pounds for motor vehicles that we need to include in the statement of financial position extract. So take a look at the left-hand side where I have completed the row for motor vehicles. So I started with the cost of 60,600 pounds, which refers to the remaining costs that are there in the books. And then from that cost, I've subtracted the accumulated depreciation of 32,700 pounds, which I've calculated a while ago. And then you should get the net book value of 35,900 pounds. Once you have the net book value for both motor vehicles and equipment together, you can just add them up and you should get a total net book value for all the assets that exists in the business or in the books of Kevin Penn.